How to get no-doc business loans and business line of credit for businesses up to 2 million, up to 150,000, startup friendly. I'll be breaking this down, going through the requirements and more. Before I do, welcome in. My name is Michael. I'm a funding expert. I have a high level in business, real estate, private equity, and debt. My overall title, you can call me and role, is a business architect, meaning I help structure, strategize, and funding, getting you lined up with the right funding solution, service, knowing the requirements, the back end, the process. I review a lot of financials, mathematics, cash flow, profitability analysis, in-depth look at things from the bottom up, building, growing, expanding businesses, fixing, growing, scaling them, and more. And right in front of you, I'll be scrolling down to go through what no-doc business loans are, what they mean, what could be out there. And so you have the right expectations going into this. I do have another tab here I'd like to open up. Right here on LinkedIn, I posted most businesses don't fail because they can't get funding. They fail because of this. They raise money before fixing structure. Hi, family. As a business architect, meaning I design how businesses are structured, funded, and scaled, I go about what I do quietly, analytically, cerebrally, more of the brainy type, behind the scenes, silent partner. I don't talk much. I do. In my head all day, reviewing behind the screen, the computer. I've built business plans, detailed project budgets, investment proposals, full investor package, pro formas, and plenty more. Been a part of multi-million, billion-dollar projects and valuations in helping lead and coordinate, putting things together behind the scenes and making sure things are moving in the right and best way possible. So here, what I said is what I see constantly is no clear use of funds, no capital sequencing, meaning, for one, the phases, the order of operations of using funding, and how you move cash flow, how you structure cash flow, when is it the right time to get more for cash flow and or other purposes and reasons, and is it at this phase that we should do this and this much? Are we ready yet to do that and allocate our capital structure to look like this? And after that, we sequence it to this next phase to do this, like this, and exactly for this reason to get this kind of ROI, an additional net profit margin per month realistically, and for how long, and cash flow as well, and margins, and more things too. So those things are very important in understanding. And there's more to capital sequencing as an overhead and more to go throughout. Also, weak margins masked by revenue, debt stacked on top of confusion, growth before systems are in place and are working the way they need to be working. And understanding whether you are a startup or not, and small batching versus medium to large batching, what that means, taking the whole manufacturing background and outlook and understanding your inputs and your outputs. And you can model this for different industries if you are in construction or plan to be or not, restaurants, technology, anything AI and infused, data centers, agriculture, the list goes on and on. Funding doesn't fix that. It amplifies it 100x, not just 10x. And if you added funding, you're just adding more fuel to the flame that's already existing. And where there's smoke, there will be fire if there isn't already. The businesses that actually scale do this first. They clarify the business model. The business model may not be working, it could be broken, and it isn't easy to fix or at all. And you could be trying to streamline this with technology and cash flow management tools and systems, but it's only going to amplify more of that pain and that threshold that comes through the creeks, even if it comes in slow. And it's bound to be, and it's bound to show up at a certain point and usually much quicker. And then once one thing bursts, there's more pressure building through that. It goes out, and now you're going to funnel in more volume of that. Right here, clarify the business model again, how money really moves, fixed structure, entity, ops, operations, margins, pricing, and there is more. with unit economics and more things that I can go through. Map capital properly, debt versus equity versus cash flow, and there are other types of things if we're dealing with hedge funds, banks, what type of properties, hard assets versus soft assets. What is it that the purpose of using this property is for? What are the cash to cash returns? Are we having any investors coming in? What's the ARV? Or what are we doing to inject cash into this property? How are we doing that? Are we refinancing? There's a lot of different things that we can look at in phase by phase. Build systems before growth, then they bring money in intentionally. Funding is your output, not the strategy. What's been the biggest blocker for you? Capital access or business structure? And you can let me know that down below in the comments, or if you'd like to reach out to me, I can message you in Messenger and or by email. I even have people on a text by text basis. And by phone, I'm not always that easily available. I have to be very careful with my energy and time. When people ask me, like, what is the best way to get a hold of you? Can we schedule an appointment? I'm not traditional. And that's a good thing for you. It's not a negative because I'm not a talker. I listen more than anything and I ask the right things. I've built multiple businesses. So I know exactly what to do. I built products. So I know from marketing to advertising. I'm not a salesperson, but I know sales enough and having built websites, structure, governance, and making sure everything is set up right and working right. Email marketing, digital strategist, funding expert, business high level, real estate high level, personal growth and development, self mastery, and more. I'm just a simple person, not materialistic. I love the fish. And so you could answer that if you'd like to down below in the comments. And then you see right here, business architect is just the image that I put on there. And I'm just behind the scenes doing a lot of this. So back to here, and then I'll go over some of the other tabs and how you can reach me. And I'll have more information down below in the description for you to check out. So right here, I have no doc doesn't exactly mean no verification. What it actually does mean and imply is there aren't specifically any tax returns. So when you hear no doc, you may think automatically, oh, no revenue verification, it's stated income, no personal guarantee, and I'll get to that in a moment. And I don't have to supply any EIN or verification letter, articles of incorporation, Secretary of State, formation within that state or from where, and I don't need to have any financial statements, no P&L, balance sheet, cash flow income statement, and beyond. I don't have to have any certain document that I have to find online and make sure I sign and I file this. So it makes sure that my business is able to receive this kind of funding, and then I have this other secured note by it, anything reciprocal, anything that I need to have added for write-offs and all these things now. So no tax returns, no financial statements. That's what it actually means and implies. So it does not mean no entity or no compliance. And it doesn't mean that you will not be supplying that. It means that you will. So you'll need to be showing that there's an entity, that you have ID. How are we able to tell that this is you and that it is compliant? Obviously, everything has to be compliant, so that reduces into no liability. And it's visible to see that there is no liability. What is usually required are these: having an active business entity, because how will your business get funded if there's no active business entity to fund and it is terminated or whatever else is the case, that this doesn't exist and it's not in proper good standing, you need to renew something, and so it can't be funded. That's what's happening, is your business is getting funding, not you personally. It's you, yes, you're the verification, you're the actual business before the actual business you're looking to get funded. Articles of incorporation, secretary formation within the state, SOS. There are different names out there for these and different things you can supply. So articles of incorporation, verifying that your business is operating and in good standing, it's structured and it all lines up, and just verifying the documents to make sure everything is accurate and it can be traced and tracked. EIN verification letter, because using your EIN under your business is what you need, and not just solely relying on the SSN, making sure there's an actual valid EIN, that this is the EIN that is actually applied to this business and there isn't three or four of them and you're using the wrong one. Government issued ID, front and back, driver's license, a lot of the time. If there's ever asked for a voided check, but there are instances where that isn't, and it just depends on the type of funding. Business bank account. So where will the funds be distributed into? You have another business, but you are applying with this other one, and that's where the business account is under. What you do to move money out of that account afterwards is a different thing, and what you're able to do. So having a business bank account is super important. KYC and AML, I just left a little bit there, but I'll go beyond that. Those are things that also just for verification and understanding what is there. And this is also a purpose for other things that are out there with other funding services and processes. Funding services this may apply to are business credit card stacking, the 0% interest business credit cards for 6 to 12, 6 to 18 plus months, and it just depends on the card issuer and the time that you're getting these and the economy, macroeconomics, with everything happening with credit and the credit rating and where that is and going, consumer sentiment, labor, housing, employment, trade, fiscal, monetary, and different policies, global investments, trade. There's a lot of different things happening. You can spend a lot of time on those topics and go deep into those. Well, now, so the business credit card stacking, adding multiple business credit cards for the use of real estate, for your rentals, you're using this for rehab in the property, for renovations, for additional costs that you need to service, to pay down on that property, to have then more cash on hand or be able to liquidate the cash from these cards. And there's a lot of ways you guys can structure this. I've helped people with Section 8 housing, fix and flips, fix and holds, to rent, to refinance at what certain time. And I know how to structure and strategize to make sure you're doing this accurately and analyzing properties. You can use this to apply it towards commercial, residential. You have Airbnb. You're doing anything in technology, manufacturing, construction, restaurants, nail salons, digital marketing agency, roofing, HVAC, other types of businesses, and the list goes on and on. So what we have here is business credit card stacking again, bank statement underwriting. If there's any bank statement or bank statements asked for that make a better case for you to get that kind of funding, and it's more of a low doc instead of having to add so much more revenue-based advances, MCAs, the hybrids of the world, and those could be lower doc with 3 to 4 months of bank statements, a copy of driver's license, and a voided check in most cases. Anything more asked for, depending on how much you're getting funding, there could be a tax return or a couple P&L and or something else to help verify and more reasonably. So these are low doc or alternative doc, no not doc. So everything has some form of documentation. Now that you know, and if you had that hunch, then you are correct. There is some doc, but it can be very little doc compared to SBA loans, bank term loans. You're supplying ample amounts of tax returns, P&Ls, balance sheets, and we need it to look this certain way. Then you're being asked to make sure your cash flow is like this, profitability, reporting net income like this, profitability during this time and these years like this, historical returns, checking deeply more into the credit, FICO, SPSS, and all that. That could be more medium to higher doc services, and there are more that are out there. So these documents, they still exist for the type of funding. They're just from different tax returns. And understanding your tax returns and how they apply to the type of funding you're asking for. And if you're getting like a personal loan and it's coming from a bank, then that would be usually asking for 2 years of personal tax returns and more utility bill, W-2, or pay stubs, and there's more to be asked for. For business credit card stacking, the approvals is based on your personal credit profile. And right here, well, this on in terms of what you have received, if anything, already in the business. And if there is some revenue verification for anything over 50,000 that needs to be verified and it makes a better case, then that's a lot of the times where it comes from, but it's a lot of it being stated income. So this could be said as stated income first and just business formation, how long your business has been in standing, how many years, the more the better. Has it been a seasoned LLC or what type? S Corp, C Corp with LLCs under it, C Corp with a holding corp to a trust. What else? So a lot of that does help, but your personal credit profile is usually what is looked at. And that's where the personal guarantee does come from. And you have to ask yourself, what happens if I default? What will people do? What would that entity or that uh, lender funder that helped me get the funding come after me for? And you see this very commonly in a lot of places, and making sure that you understand that they have to go out there and seize accounts, freeze accounts if they needed to. You see that like with merchant cash advances and people getting AR and their receivables and how much has been in the hold, like a bucket that goes into before that payment is given to the business owner's account and it lands in their bank statements that way. And it's shown as that income and that reported income. And so a lot of the times you have to understand that there are these processors out there putting holds, freezing them so these lenders can get their money and as best see fit. Obviously, they want to help you. I want to help you. I never want you getting into any default. And if you have any, if you need help with these merchant cash advances, by the way, the high factor funding based on your future receivables and more, I also help people get out of MCA debt through consolidation, refinance, reverse debt consolidation, collateral settlements, MCA debt restructuring, and other forms. And usually most commonly used is MCA debt restructuring by reducing by an average of 50 to 75% of the daily and or weekly going out and looking at everything total monthly too, and also considering the face value. And there's more with numbers that I evaluate and analyze behind the scenes. So stated income, income strength can come into the picture if there's more and if it's verified and it makes a better case for you, then there's that. Still requires though your entity, as I said earlier, an EIN, verification letter, ID, articles of corporation, SOS. This is not a loan with the business credit card stacking. It's revolving credit issued to businesses. And it's those multiple 0% interest business credit cards from like the Chases of the world, the Banks of America. You have the city out there. There are regional banks and other types of banks and institutions, FDIC, insured, and more that we can look at. And depending on what you have and don't have, your credit profile and mix, history, how much you've used of what is there, utilization, and more, I'll have a better understanding of what is possible. And also, most importantly, is how you're applying the funds. And if you haven't heard, without me saying it directly, is I'm someone who will take the time to understand the business more in depth. And I've looked at a lot of businesses over the many years I've been doing this. In total business, I've been 13 years now. And I know my stuff. I just don't talk a lot. You hear me now, but I'm the person that's quietly behind the scenes looking at everything, pulling the strings, reviewing when I can review as much as I review, when is it the front end, the back end, middle of the way to the back end, and more very organized. And it's very hard to trust people on this side. I get it if you think that it's already hard to trust anybody, especially in this world and economy we're in, where we look at affordability, we look at the K-shaped economy, We look at GDP growth and where that's been recently, positives there. And when you look at year over year growth and so much more where people are having a hard time keeping up. And you see a lot of drop offs, people not being able to have insurance, proper insurance, the right type of care, the right type of outlook, and feeling more confident and secure about things. It's already hard enough that a lot of the times people waver in their critical thinking and they just want to say instead of think a lot of the things that are going to help them longer term. Instead of thinking internally a lot, people are thinking outwardly a lot and are quick to give an answer instead of stepping back and observing and delaying that instant gratification, no matter how hard things are. But hey, I'm having trouble with this payment, mortgage, and all this. And you see drop offs, you see reimbursements out there, you see liens, you see holds on a lot of things, and balances going off the roof, deductibles, everything you can think of. And believe me, I'm in the markets, stock market, crypto, bonds, money market funds, 401k IRA, rollover, and more, debt with private equity and debt. And there's plenty more that I do. And I have been associated with and overseen big, small, medium-sized projects. So I get it. So the real issue most business owners face is this: cash flow problems are rarely caused by a lack of funding, getting any or enough of the right type. They're usually caused by weak margins, poor pricing. If you don't have pricing leverage, power can adjust to what the around you market is speaking to, what people are buying, competitors, wholesale, retail, and different margins you're getting from this and additional net you're trying to make, and more. Bad capital sequencing, debt stacked on top of confusion, timing mismatches between inflows and outflows, more goes out than comes in, and consistently fast capital can severely amplify and expose a weak structure. I see it all the time. Again, I have a lot of experience, not only in my businesses, but helping many. And a lot of the times I know their business more than they do. And they shouldn't be, but it a lot of the times is. And you should know your business a lot more than I do, and it's likely the case. And then I understand it better, the numbers, I analyze it, the measuring, the data, the understanding that, and then looping back to that and measuring everything that I need to do to make sure everything is right. And so cash flow problems are rarely caused by lack of funding, and you got to see some of many more. And if you ask me, what type of business should you get into if you're thinking, is the one I'm in or one I'm getting in the right one? I would say is get into a business where it doesn't require you to have to fully be there 40 to 70 hours, whatnot, a week. And it's constantly dependent on you. Customers, clients, they're constantly dependent on you. And without you being you, and because you are building or have built and continuing to build a brand, personal and business brand, that if you removed yourself, the business would plummet. And decreasing revenue trend, cash flow, operational margins, contribution margin, and plenty more would seize and or just dip, whether that's quickly over time, segmentation of those dips and cleaning that up. There's a lot of things there. And I always say start a digital business, because if you start one with digital products and you have less overhead, less expenses, and less capital intensiveness. With a lot of startups, your capital intensiveness should be less than somebody who has been in business and is scaling, growing, expanding, and scaling, predominantly scaling. And if you're in that startup phase, you know how to properly allocate funding much right up faster and don't always know the exact return you get right away until you feel the market. But what you can adjust and measure is the output of that capital risk where it's not so heavy in terms of you're not draining out of what you need to use, you're not overusing it for overcompensating, and you don't have to have a massive amount of reserve just to use that to get your business off the ground. Poor pricing again, bad capital sequencing, debt stacked on top of confusion, timing mismatching between inflows and outflows, and again, weak margins. Fast capital can severely amplify and expose weak structure, like I said. So, how do you know when using low doc funding makes most sense? When low doc capital makes sense, most sense, it could be sometimes little sense depending on how much funding and what point in your business and process you're in, is when you have a need for this, and it's not an exclusive, exhaustive list, there's more short-term bridge funding when you need that 0% interest, you need low doc fast funding. It's a bridge for you to use capital that may be otherwise expensive in terms of this way being expensive, another types of funding being less expensive. It could be more capital intensive. You need to add much faster or over time, the duration that lasts can be a lot more. But with short-term bridge financing, whether it's on 0% in your APRs and 24, 28% or whatever that is, sure, that can be looked at as expensive debt you're adding, but it's on credit cards. And with that 0% introductory period, what you're getting in to leverage, and whether that's property, you're looking at a specific cash flow of $300, $800 per property. Your goal is to get to this. How should you sequence funding correctly? Yeah, one property to start with, we'll have to analyze the property, you have to see what everything is in the property. And are there any fixes that would require more fixes? So you need an actual rehab allocated cost of an additional 10, 15,000 here. And anything that comes up, you need a 10% reserve of that towards this and not defined by this. So there's a lot of different things to look at, but making sure that you can get in and as quick as you get in can generate an ROI, whether it's in the next quarter, within the next month, the next week, the next couple of months, 3 to 6 months, preferably not so long out that you go, well, I can't pay this capital back. That when that 0% interest period matures and now you're looked at paying the debt and everything you have remaining. And if there's other types of debt out there where you have principal and interest adding and accruing, and you can no longer sustain those payments, and you have others that need to be paid, you have dividends, you have shares, you have a lot of things, and share price goes down, and oh, there's so much that can happen. You just have to be careful with who gets involved in business with you, and also looking at if nobody else does, is what you're doing yourself, and always educating yourself. And I'll have more material down below in the description and how you can reach out to me and the best way to do that because of energy and time and what I said earlier. And I didn't get so much into the detail on that, but I have a different way of doing things and how you can reach out to me. I have my link tree. I'll try to link you to down below in the comments and or description. And I usually have people fill out a form on my site so I can better understand and evaluate, analyze, and I'll respond via email a lot of the times. When it's clarity, a lot of the times it could be this or initially, but a lot of the times it isn't. A lot of the times people are just tire kicking. All they want is information and not at that stage to do anything. And that's okay. It may take you some time, others right away, or they're there now. That's fine. I get that. I understand. I put myself in your shoes. I've been you in different types of funding. And I know that a lot of people, they self-sabotage, they self-defeat. That's why I'm very careful when I give people my energy and my time. And I'm not trying to do more volume. I used to in the past. Now it's much more closer circle, and I've been doing that for many years. It's quality. Less than quantity, it's quality. So if you're coming into my circle and I'm open to bringing you in my circle, take that as a hmm, great thing, big accomplishment. And I am really here to help. And I got into this because I saw all the pain that I went through and what I didn't want people to go through and who they were being taken advantage by and what people do out there. And you have to understand that I'm not just a funding expert. I know my business, real estate side, personal growth and development, self-mastery. I have investors I'm connecting to project owners for investment projects and participating in huge multi-million, billion-dollar valuation, helping lead structure things, distribution, marketing, and advertising, and more. So short-term bridge funding, temporary liquidity gaps or gap, and that could be filled in by even a personal loan. You can use a personal loan and or business credit cards, depending on if you qualify or not and what option is best for you if you have one or the other or both you could get. So temporary liquidity gaps, and if they're small or large, and to cover large expenses or small expenses that you can't use the cars from, that you don't want to and or just can't anymore, or needed more, but then you have quick access to a personal term loan used for business and or other types of funding you can use to cover short-term liquidity or even longer-term liquidity gaps and exposure. Clearly defined use of funds, measurable ROI paired with restructuring. So if you plan out 6 months Section 8 housing, or if you're doing 12 to 18 months out on a specific property and rental property, and you're going to DSCR a specific property that hasn't been rented yet, you're looking at commercial property. I can give you so many examples, not just real estate, equipment costs, what you're covering with the down payment, closing costs for specific types of funding services, what you're using for materials and supplies, raw materials, for an Amazon business, for retail, digital marketing agencies. I've helped all of these and more, and I've seen everything, literally everything. And if there hasn't been something, it could be something that just came up or a subset of an industry that something differently applies to them, some different innovation. So a different innovation strategy needs to be applied to theirs. So I can sit here and tell you everything about short-term bridge, temporary liquidity gaps, and how to apply that for a staffing company, for a financial services company, a credit repair company, for anything. And this is what I do. I'm not on phones every day constantly. I am very structured. My habits, my routines. I read a lot of books. I listen to a lot of podcasts. I am actually in the trenches, not just listening and telling you. I'm actually living it. My own businesses and many others. And I'm telling you, you have to line up with the right person. Think about what I just said, and there being dashes between each letter with the right person. Each letter, not just words, W dash I dash with the right person. Because if you don't, and if you take that as a joke, you take that as not being serious, don't come to me, period. I'm not one who wastes their energy and time. I'm very kind and nice. Everyone around me and those who I've been so grateful and thankful to help in many ways, not just funding, they'll tell you. And I'm not one to raise my voice, but the tonality, I want you to understand that this is very important to you. And I want you to see that if you don't, or more of it, and how important it is to me. And when people, they tire kick, it's no, I don't want none of that. Please go away. Don't ever start with me, period. And so all of this, it can't always be a long-term fix. It can be in ways depending on what you're doing. Is it a band-aid solution? Is it not a band-aid solution? This is something so you can just get more people and more payroll added. You need to get a cash flow financial management tool added, and in the period of that, you need to focus on structuring certain parts of cash flow before you start reporting it on this new software or something like that. So the structure comes first, not the funding. And so you got to see a bit. I also have this document I can share with you in time for business credit cards and more. So no more than three unsecured accounts open in the past 12 months. It used to be like around four-ish or not in the last 6 months. No more than three bank inquiries per bureau, or it could be no more than two in the last 12 months. No bankruptcies at all showing on the credit profile, no open unpaid collections or judgments, no late payments in 2 years, no charged off accounts. And a lot of that is for the credit card stacking, having a 700 plus credit score, or if you have a 680 credit score and on Experian and Equifax or Experian and TransUnion. And those would be looked at as a personal loan, but better yet, 700 plus credit. And if you don't have good credit, you can use a credit partner, somebody who can come in and help personally guarantee. And if they own at least 10% of the business, then on behalf of getting business credit cards, they come in and they're listed on the business. And if they're not, then they can come in as a personal loan guarantee to use for the business. In other cases, that may not always be the way it works. But if you file joint tax returns and with somebody, and that's always the best way to do it, then there's that. So there's part of it right there. And ways to reach me. I also have my Facebook group right there. If you're not in there, I highly recommend it. I have other groups out there too for financial literacy and more, and my other businesses. Here's my link tree that if you needed to contact me, and I'll try to leave that down below. Here's my Instagram profile, and where I have been active. Sometimes I pop up and I do a spontaneous live. So I highly recommend you get in there if you need to know and have more proof. Sorry, I'm lifting up the chair. That I am a real person, that I practice what I preach. I'm not just here. Here's all the information I looked up and here it is and how it is. There's things out there that when you look something up, that's not always it, or it's been expired, or there's a new way, there's a better way to do something. And so I'll pop up here. I do put some reels up every now and then. I'll do a spontaneous live to say hello, see how you are and everyone. And you guys can ask me questions. Sometimes I have a topic, but lately I've been open room, ask and you shall receive. I've opened the floodgates. And if you can't make it, that's fine. When you can, do. And there will be returning people who know me and they'll tell you in the chat. I don't ask them, they don't need to. And when they don't, you don't have to say anything either. I'm not a talker again, but I'm there to help. And as much as I don't want to be on video, I'm here to give you value that most will not give you. And here's my site, just one of many that I have, and you can check that out. Services. So what I have too is a product. I have a couple of products that I've created and more you can get access to. So if I go to services, this is mostly it's not a done for you. What's done for you is in the material that I have and everything that I put together and crafted. So here, 5-day cash flow reset, and then the cash flow mastery system workbook. So right here, I do need to change coming soon because it already is. Just have to make an edit here. And so here, stop struggling with cash flow, master your money like a CFO, and take control of your financial future. So I have a very underwriting CFO mind, if you didn't catch on, and a thinker, critical thinker. I find myself a lot of the times that I say this nicely and kindly, thinking for others, and I don't mind it. Depends on my availability and things, and I'm here to help where even I have things that I can't think of that, and so I have somebody else who shares with me information that I need to hear that. And though I find myself a lot of the times as the critical thinking type, figuring that out and solving problems at many levels and high levels. And with this, I created this product not so you can solely go and report on a cash flow financial management tool right away. It's mostly so you can think about cash flow the right way and differently than you likely have been now. And this is the emphasis on why businesses struggle and why they go out of business. They file these bankruptcies. They get into all this type of debt and burden they shouldn't be getting into. What type of margins are people running on? What are they fulfilling on? What's their new customer acquisition costs? Understanding cash flow that's deriving from all these things and different formulas and different things you need to look at instead of just saying, well, here's how I interpret this because technology helped me streamline it. That can be a liability and it can open up so much more that you go, what do I do now by just putting something on paper? That's easy for anybody to do. But how about I challenge you to actually do more in terms of critical thinking in cash flow, and then that can spur out a lot more in other ways if it hasn't already with profitability, different metrics and analysis, and financial structure and analysis. So you're not falling behind and lagging behind and having to pick yourself up when it's already too late, or it isn't, but it's at the time when there's too much pressure going on, and now I got to look at this. So here you have this where I help you critically think, asking yourself how to type of questions, knowing the formulas, and each phase 1 through 10, and then there's a conclusion and next steps. Each phase builds on top of the next one. So you're building in like Legos, building blocks, kind of like as being younger and being so happy, Christmas Day, Lego blocks, or whatever it was. It could be Jenga. and you're just trying to remove things so you don't break everything. You're first stacking them so everything is structured right, or if it came that way, or you needed to structure it again, and making sure every piece is in where it needs to be. You're even looking at like which one I can push out before it's already set up. So making sure the building blocks, the Legos, the clay, the mold to this is right, and it'll stand the test of time and times instead of just putting numbers to paper, to software, writing it down in Excel spreadsheets. I can show you all that, and I will give you more in terms of that, a lot of it here, but each phase building on that. And I even have video lessons. I even have a course for this. You can even access the course for it. So you see everything right here that you can access. I have another product too. Before this one, the 5-day cash flow reset, and then you can check this one out after that. And there's another one you can check out that I highly recommend for financial literacy. And there's other things you can learn about different investments and debt elimination in other ways, and just so much more. So everything I have here, I've created so you can understand. And this you can access from my sites. I'll try to leave more information down below. And if it's not in my link tree, if it is, then it is there. You can access it right here when you click this button. It will take you to my 5 financial trust video. I also have this one here on YouTube. If I link it down below, it'll be down below. But I think that will cover everything. I'm looking over my tabs to make sure I didn't miss anything. But I know a long-winded type of email, but I really wanted you to understand this, that I think what I want you to walk away with most from this video is that I care, that it is more than funding and business to me and real estate and these investments and knowing how to uh, do this with remaining liquidity percentages, what you're reinvesting back into, where you should be outside of your business. I can help you with a lot of those things because I do this for myself and I have clients and I network with multimillionaires and billionaires and helping them also connect to these project owners who have investments and how investors think, how we think as business owners and how we think as investors and what we're looking for. And so much more to help people. And I'm here to help a lot of those who need more affordability. Is yes, there are those that are the wealthy and certain platforms make more sense for them, or there's a mix, or how it starts off at what side of the spectrum and how it evolves. But I'm here as someone who once struggled with a lot of that. I know what it's like having a lot of overdue balances, overuse of credit cards, too reliance on them, savings, checking accounts, dipping low in the negatives, always just having to pay off more expenses and client payments taking forever and broken models and systems and people's excuses. I see it all. And I'm telling you for the last time that as someone who is involved in all these roles and aspects and my focuses in what I have and what I gear towards a lot is I know how to build teams. I know how to assess teams. I know how to look at and see through someone and what they're actually saying when they're not. And because I'm somebody who infers more than I am direct. I can be direct, but I'm a lot of the times indirect. And I'm direct when the situation and the circumstances make sense. And again, very thoughtful from me. I don't pressure. It's that you go through business and you challenge yourself. And this is why the last thing I'll leave you with is I don't love to run. I was once a Division I soccer player, athlete, went to school academically, studying chemical engineering. Then I went into business, got my degree. I've worked construction, manufacturing, actual field positions in the blueprint room, in the shop. I've done warehousing, was once a ramp agent, courier role, administrative dispatch. Did not like that. Some things I did not like, but I had to do. And then I helped with their inventory, marketing, consumer budget, looking over more financial, logistics company, servicing HP and others in the vicinity, doing a lot of things behind the screen, database, lifting up boxes to deliver from time to time, forklift certified, and I've done a lot and mentally doing a lot of work too. And as someone who pays close attention to everything, it's something that comes down to challenging yourself. And when I do these runs and or I lift in the morning or whatever day that is, I'm like that old man who I have a schedule. And if I get out, I have to have an itch that I have to do it. And if I don't, it's not a non-negotiable. I have to do it. You have to get to that point where it's a non-negotiable on everything. You miss a day, that's fine, but don't let it stack. It compounds. It can easily compound. You already let one day go when your habits and your routines aren't strong. The next day, or it's I know I shouldn't, and it happens. So get back on that horse and that saddle and go. And that's why when I go and do these walks all the time and I have my podcast in and then I run, I've had my music in, rock music and whatnot. And I'm running until my knees hurt. My legs can't bear it anymore. Feels bullish, bearish, lack of better words. And I sometimes feel like I'm regressing or I had too much to eat, but I take care of myself. Other times I splurge, but I know I'm going to get back on that saddle. I'm going to do it. And I don't care how much my legs hurt or something upper body or none of it does. It's just I feel it here more than anything. That's what's increasing my endurance. That's where you find your breakthroughs and you find what you can challenge yourself with and what you overcome. When you don't do those things, you limit yourself so much. So it's less about the running, it's about the discovery of the human. And that's what I do every single day. Every day to me, I start below the ground. I'm below dirt. I haven't amounted to anything. It's day one. Let's go. It's not, I've built a lot. I sit on that and I think about it. No, I don't even think about those things. I've done a lot of good, helped a lot of people. What's the next thing? I'm transforming into the next thing. How much more people can I help? This is going to help a bucket of 3.7 million people and help you bring these people over here to do this. Okay, great. We'll segment that over here. This is the foundation platform. Let's do this for tokenization here. Then let's do that. And let's bring this over here to do this fractionalized real estate. Bring it here to this platform so that we can move it over here and do it this way. I'm looking at all that. So that's everything from me. And you got to understand no doc business loans and oh, business line of credit. Sorry about that. I know we spoke and we spent a lot of time on that. There's also a business line of credit out there that, although it's not no doc, it requires that. There are those that, like from certain banks and others, that if you, there's one of them that if you have 575 Equifax, 585 TransUnion, 595 Experian, and with an average of 20,000 in monthly sales, be a U.S. citizen, have at least 3 employees, then there's more details to that. It's an A credit line of credit, but an A credit score is not needed at 2% per month, 24% annually, and or there's 1% per month, 12% annually, and there's a few other things too to look at. Then there are certain stipulations and businesses that can qualify, those that are not able to. Then there's that, but it usually requires like 4 months of bank statements. It will require a tax return and an application. And if anything else is asked for verification. So low doc in a way, in a sense, low doc, but you're being asked for a tax return instead of just documents for bank statements, business bank statements, and an application. So that's what I wanted to mention. There is that out there. And there are many, not very many, little to none out there with that credit requirement with it to be bad credit and it comes from a bank. So if you're interested in that too, let me know. There's other business lines of credit out there that do require documentation. And so, yeah, I know I didn't spend a lot of time going into the types of credit cards to go after for this situation and how much realistically that depends on credit profile and more types of uses of funds and how you're using them and allocating them. But I hope this was very educational. Let me know if you have any questions. And again, the question that you can answer is the one I had here on my LinkedIn. What's been the biggest blocker for you, capital access or business structure? If it's something else, let me know and reach out to me if you'd like to privately, and I can help you out. So that'll be everything from me. I appreciate you. Thank you for watching. And if you did enjoy the video, please give it a thumbs up. If you haven't subscribed, please do. And click the bell notification icon so you do not miss any future content I'll be coming out with. Share it with someone, even if you don't know who they are, if they could use this and get the help that they need. I'm always here to look out for your best interest at heart as a person and in business. How can I also uh, help you, help us? And like if there's any way for certain projects that I have where you can contribute, and if you would like to, I'm always looking at all that. So I'm here to give you my best effort and know that you have, as a person and someone in business and more, that knows what they're doing, that will not pressure you, that will not give you any gimmicks, that will not waste their energy and time. I'm very calculated, very observant, analytical, and more. And I mean that in the best ways, not in a bad way at all. But this finance funding industry has taught me that more than my other ones, that I have to be that way because it's the wild, wild west over here in this industry. And I ask myself, I'm not perfect, but it's not coming from me. I see it a lot from the other side, the self-sabotaging, the self-defeat, the commingling of thoughts. And when somebody is not like working towards a better growth as a like we got to work better on ourselves because that also translates into the business. Once you start seeing all that grow and gets infused, then you start seeing a lot more of what I've been speaking of. So that's everything from me. Look down below in the description to get started on all my information. Again, if you have any questions, comments, or concerns, please leave me a comment and or look in the description so you can reach out to me on my channels, email me, and go from there. Thank you.